There's all kinds of fintech accelerators out there, fintech incubators, and all kinds of ideas around fintech and what's going to be the next great thing in fintech. William, you've got SparkLabs network off the ground. It's a proven fintech accelerator. How did you establish that differentiator in the marketplace?
One of the first things we did when we started the SparkLabs group is we believe that there is a need for VCs to help connect startups to other markets, outside markets, right? So we think that business being global, it's important for us to play that role, to fill that gap. So with that in mind, we focus on helping companies go outside of their home market, using our network within our group, our partners, to help them land new business deals, make new connections. That's really what the conviction that we founded our group on.
So you're talking about within Asia, helping companies that are domestically located in Asia export to other markets in the world, and vice versa. You
Exactly.
talk about inbound and outbound.
Exactly, and our advantage, or what we believe our strength is Asia. We have a good understanding of Asia. Our group started in Korea, and we're expanding now into China. We think that we can add value in those markets as well as other markets that we're starting to expand to.
And Peng, you've actually spent a lot of time in developing fund constructs. There's been an evolution of wealth in China, emerging wealth that's just been phenomenal, and a whole lot of new groups and peoples and families and individuals coming into the venture asset class. How have you seen that evolution?
A lot of this was built on previous investments from outside, from like America and different parts of where there were pockets of wealth. But after, about 10 years ago, with the astronomical rise of companies like Alibaba and Tencent and Baidu, we have a lot of these new founder types, early investors or early entrepreneurs who've gotten tremendously wealthy, and these guys are actually more than willing to actually plow their newfound wealth back into the VC system. For example, in Hong Kong, there was always existing pockets of wealth here, and now those guys want to be in and on the action because the asset class has actually become a little bit more mature, and people want in because they see that this is a proven thing, that you could create a lot of wealth.
Well, and on that note, you've actually described seeing higher valuations in China on an apples-to-apples basis in companies, and I'm sure this impacts you, William, in a significant way at SparkLabs. Why have those valuations become a premium here?
I think it's important to understand that the markets, as much as we're a globally connected world now, there's still a lot of nuances in each market. So we've seen plenty of examples where an overseas company try to come into Asia, especially China, and have not had the kind of success that they expected.
Yeah, cultural reasons, operational reasons.
Exactly, right?
Zones.
So, I think there is a premium placed on domestic companies for exactly those reasons. I think investors tend to feel a little bit more affinity towards, domestic founders. From partner standpoint, right? It's also, I think, easier to be associated with one of the big players in China and work with them to scale your business if you're a domestic company versus an offshore company.
Well,
in our experience,
there's the cultural aspect, but then there's also an access
Absolutely.
aspect to it. How do you see that playing out?
And that's exactly why for us in our Shenzhen accelerator, we've partnered with Ping An Group, which is one of the largest insurance companies in the world, because access is so important, right? I think many investors, overseas investors, would share with us that how do we do China, right? I mean, and many have tried, and many probably haven't had the kind of success that they want to. So what we want to do is to create a platform of access, and we think that partnering with Ping An, being the behemoth that they are in not just the fintech world, but also now in healthcare and smart cities, it really allows us to have a good platform for startups as well as for investors in a very de-risk kind of way compared to your regular sort of early stage opportunities.
There's a lot of money coming in, but
Right.
the money that's here may have a hard time, given the current climate that we have, it may be hard for a lot of the money to go abroad.
Yeah, there's a different risk profile.
Correct.
than
And that's
people
why
have
you have a
perceived
lot-
on both sides of the ocean, actually.
Correct.
There's
That's
a
right.
different risk profile, perceived different risk profile.
That's right.
When you think about disruptive companies, though, and how you identify those disruptive business plans in fintech, I mean, as a fintech investor myself, I just see a myriad of business plans, and they all look great on paper. How do you find the founders that are really going to make a significant disruptive
Well,
impact?
you and I both, right? We look at a lot of interesting businesses, and some of them I generally felt, well, you cannot miss this. But ultimately, in our experience, the sales cycle, especially in financial services, it tends to be long. And I think for a startup to be able to weather that cycle, oftentimes is challenging.
Right.
So for us, what the key thing to look for is whether this business is scalable, keeping in mind that they can actually close some contracts, generate some revenues in a reasonable amount of time. So as much as some businesses could be really, really interesting, if we don't see that path, we tend to pass as investors.